Joining us now is Truist Advisory Services Co-CIO Keith Lerner and Annandale Capital founder George Seay. Guys, happy Friday. Keith, you think we're near some resistance levels on the S&P here. What's going to determine whether we break through?
Yeah, well, first, great to close out the week with you, John. We've moved about 10% off the lows. At the end of October, our view was that the pullback was a buying opportunity because we thought yields were peaking. And we've seen that sharp move down in yields, which has provided a lot of energy to this market. So as you mentioned, we're in this 45 to 4,600 range where we think the market is more likely to digest some of those gains. We ultimately think that we break through that, but markets don't move in a straight line. And what ultimately gets us through there, I think, is that we are in the seasonal positive period. Forward earning estimates are at a 52-week high. And I do think there's a lot of investors that have underperformed this year. And going into the end of the year, I think there will be more of a chase in. But again, a little bit of a consolidation after such a strong run in really only about 2 weeks.
Okay, and George, you're looking at value stocks versus chasing the big folks?
Hey, John, I thought the reaction to the inflation number earlier this week was just hyperbolic. I mean, it was really, really euphoric and fun to watch, fun to experience if you're along the market like we are. And I think the rest of the year should be a lot of fun, too. I think we'll get a Santa Claus rally going into Christmas and post-Thanksgiving, and things will continue to move upward. But I think that, you know, all the people predicting a hard landing in a recession 2 years ago, which never happened, they may actually prove clairvoyant next year. I think next year is going to be tough. And I think we've seized a lot of gains from next year into this year. And I think that it's very likely that we get a significant slowdown, if not a recession next year. And that's going to make it really hard for President Biden to get reelected. I think people should enjoy this while it lasts, but I think next year is going to be more difficult.
When, George, do you think we're going to get that sense next year? Do you have a quarter or a particular catalyst in mind?
You know, John, I really don't. I'd say the latter half if I had to guess, but that's all it would be a guess. But I've been calling for a soft landing for 2 years, and I think we got that. But I think the Fed has overshot on interest rates, and I think you're seeing some significant signs of slowdown now, whether it was Cisco this week or Walmart or other companies. I think we're starting to see telltale signs that we're going to slow down next year. And how much, I really don't know. But if I had to guess, I'd guess we have either a 1 quarter retraction or maybe 2 quarter retraction. And if I had to bet, I'd bet the latter half of next year.
Okay, and finally, Keith, you favor large caps in tech. Any particular opportunities here with the OpenAI news that we saw ding Microsoft a little bit for some other companies to prove their AI chops, or is that not what you have in mind?
Yeah, well, we've moved, 14% off the lows, and as of the end of October, semiconductors are up about 17%. So I also think you're going to see a bit of a pause there. But I would say any kind of chop that we're looking for over the next week or two, I would be still leaning on tech, semiconductors, software, because I will say this, John. Tech was the last to go down, and they came back among the strongest, and they are still leadership. They have not relinquished the baton from other sectors. And at this point, they just made a 5-month relative high to the overall market and an all-time high for the tech sector this week. So we still think that's a good place to be. But again, a little bit patient over the next week or two.